It's Don Vandenbord with his granddaughter here, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. It is Thursday, December 22nd. She's been bugging me to do that, so no better time than today. And my younger granddaughter will help me out with it tomorrow. So, where are we? A little bit of a different intro here. So, state of the market, no change today. We're in a correction. Check over here at the trend gauge, no change there also. Market leaders neutral, still have quite a few holding up. Strength is displayed in the pullback, and we saw some strong stocks today bucking the trend. Relative to the five indexes, which we review in every video, short term, all five below the declining 21-day moving average. So we're in a downtrend there. Medium term, little bit of a mixed bag, and we still got the slope of the line turning up, so we're neutral there. Long term, all except the Dow below the 200-day moving average, slope of the line pointing lower. So what happened today? Very red day, you can see by the closing numbers there, but losses cut in half, and we did an undercut and reversal against that key 3,800 level. So early afternoon, I was like, stick a fork in this rally. It's done. Santa Claus is not coming to town. This is the Grinch taking over here, stealing all of your presents and your capital. But the market turned on a dime around 1:30 Eastern time today. So we went from a trend down to a trend up. And like I said, ugly day, but the losses were cut in half. S&P was down 2.9% at the low today. And severe undercut of that 30. Really, there's a range of about 37.95 to 38.20. Clearly breached with the low today of 37.64. But we got it back, then undercut again going into the close, but reclaimed it by the close. So here are the numbers on the day. G6, this is our in-house 6 ETF growth tracker, down 1.8%, S&P down 1.45, Nasdaq 100 down 2.45, Dow the strongest, down 1.05, mid caps down 1.1, small cap Russell down 1.3, global diversified 60/40 down 0.77, in-house GROTECTION slightly positive on the day. When we got extended to the downside, we trimmed our hedge and also trimmed our, so we did offensive selling there, and we did some defensive trimming on our nugget position as gold stocks were not acting well today. So let's get into it by looking at the charts, then getting into the tail of the tape and our focus list. So at Revere Asset Management, we're active managers. When the market is in a bullish posture, when it's trending above the short term and the medium term moving averages, whereas long as we're comfortable, long meaning fully invested, when things start to roll over and the slopes of the lines roll over, we'll get less and less invested as the market weakens. And that's not our decision, that's the market telling us, and our stops taking us out of the market. If we break below the black line, that's the 200-day moving average, our long-term trend indicator. That's when we really get defensive, because all bear markets, this is the last 13 bear markets going back to 1968 to 1970, they all occur under the 200-day moving average. On average, when you high to low before you break the 200 is about 12% down. That's about what our loss is year to date at Revere. But it's what happens under that 200-day that really gets you in trouble. And the maximum this year was down 27.5%. Right now, we're down. The S&P is down 19.8%. Again, that 3,800 level is key. That's the year to date minus 20% level, and also some key fib levels. But we are risk managers first here at Revere. When you're under the 200-day moving average, we take the bull by the horns I should say we take the bear by the horns, because we're not bullish at that point. We're in capital protection mode because we want to protect you from these highlighted areas negative sequence in returns can ruin somebody's retirement after they save their whole life for their nest egg. So that's why we make risk management our number one job, and then the returns take care of themselves when the market gets back to bullish. And the market has been struggling repeatedly to get back to bullish over the last 6, 7 months, meaning it cannot get back above and stay back above the 200-day moving average, this black line, which has now dropped when it rolled over from 4,500 all the way down to 4,000. So this means our reentry criteria will be able to get in 10% lower than when we exited on the market, because we've got rules that get us back in at different levels versus different moving averages, and depending how leading stocks are acting. But this month or early next month, if we got back in long above the 200-day moving average, we'd be getting in about 4,000 when 4,500 is where it started to roll over. So if you're interested in this approach, reach out to me, Don at RevereAsset.com, or my partner, Dan Stewart, Dan at RevereAsset.com, or call 855 Real Wealth. That's 855-732-5932. So big day today. Let's take a look at a 15-minute chart here. So yesterday, I talked in the video that was asking, was this the beginning of the Santa Claus rally? Technically, the Santa Claus rally is the last 5 trading days of the year, and the first 2 trading days of the following year, if you those 7 days, if you want to get strict about it. So technically, it would start tomorrow. The markets are closed on Monday, the 4 days next week, and then the markets are closed the Monday after New Year, so it would be the Tuesday and Wednesday after that. Uh, that's the official Santa Claus rally, and like I said today at 1:30, I thought that pretty much would be done, but look at this, just this turnaround and come back, and it's a win for the Bulls. Technically, a goal line stand, you might be able to say that the Bears had the ball 4th and 1, trying to take it lower. They went below 3,800, and the Bull linebacker came diving across the top of the line and knocked him back. And we closed back above 3,800. So, can you tell I'm jazzed about the Jags and the Jets on TV tonight? I might be, with the football analogy, American football analogy, real football analogy. S&P. So there you have it. And then again, we tried to back test it. Look in this 5-minute chart here. So we failed miserably at that 30. Again, like I said, it's really like about 38.20 to 37.95, which was the low here on Tuesday. Tried to hold it here a little bit, and then boom, it gave way. Big uh, whoosh down. That's a technical term, whoosh, from noon to 1:30, and then just a complete U-turn, trending back higher, got back above it, and then this back test here, we tried to fail late in the day, but it held 38.05, and then back above 38.10, closing at 38.22, rounding up to, yeah, it's 38.22. So that's your daily chart on the NASDAQ 100. And also I want to point out a great way to isolate strength. I said strength is exposed in the pullback, is revealed in the pullback. This is the baseline for any stock or ETF that you're looking for. So you failed gap up, break lower, try to bottom, rally yesterday, break out, and back above it here. I'm going to look at bring up a couple of charts here, and you'll see how looking at different time frames really makes leadership stand out. And that's how we identified a couple of things today for our focus list. So let's go to the NASDAQ 100 next. Absolutely the weakest index, undercut, and didn't even really close back above where we undercut. If you look at the 15-minute chart on this, it's very clear when I put the line up. There's the low. We didn't even get back to the low from 2 days ago at the high. So extreme weakness there. Once again, Tesla down 8.9%. Micron, terrible report after hours yesterday. Hit the whole semiconductor sector. The SOX was down 4%, Amazon down 3.4%. Just continues to be destruction in those big FANG stocks. Now let's look at something that's outperforming the Dow Jones Industrial Average. Here's that 15-minute chart again. Look how the Dow never even undercut the Monday lows. 32,581. Today's lows 32,573. Okay, it did undercut it, but for about 5 minutes and then get back above it. Sometimes that little break is all you need for the undercut and rally. But the Dow very clearly the strongest of the indexes. Let's go to mid caps now. MDY. Again, let's bring up the 15-minute chart so you can see here. Right, the low was about the same as a low from Tuesday, 433.34, 433. So didn't quite undercut, closed again upper part of its range. Um, and IWM small caps, they did undercut but reclaimed it. So across the board, undercut and reclaim of key areas, with the exception of Nasdaq 100, which, as we know, has been weak. So look, this is, we've talked about sometimes bottoms are put in by these false breakdowns, and this. I've got to be optimistic. We're under all the moving averages, but we are literally entering about the most bullish 7-day period in the entire year, and that's one of the reasons why we took some profits when we were extended to the downside today in that SDS. Why we've been taking profits this week when we were rallying into uh, declining moving averages to wrap up some gains. But if we do show a rally tomorrow and early next week, we'll make a couple of changes and participate in at least catching part of it, with the intention of seeing how far it can go. Can it get back above yesterday's highs? That would be extremely bullish because it'd be a break above the 50-day moving average, and you've got the declining 8 and the declining 10, 21. That's the green line and the purple line going to meet up there next week. So there's a very serious resistance overhead above yesterday's high. But also apparently very serious support below 3,800, which 3 times in the past 4 days we've undercut and reclaimed. Let's take a look at a couple of other indexes. First of all, the VIX. We talked about yesterday how the VIX was coming into this area where it couldn't go any lower. 3 weeks ago, back in August, back in April, back in February, back in January, and a big bounce today on the VIX. Came off quite a bit after the market started rallying, but all the way up to 24, above the 21 into the declining 50-day moving average, closed below the 21. So that trend is still intact, but you can see how fast this thing can move uh, in sync with the markets. I should say opposite of what the markets are doing. Here's UUP dollar, second day of a rally into the declining ADMA. The ADMA has basically capped any attempted rally in the dollar. Only single closes above there going back 6 weeks. So a rally above there, back above the 200, back above the 21, kind of in sync with what's going on with the markets as far as resistance areas go. But the dollar all the way up here, not where the markets are, relatively speaking, to where they were earlier in the year. Let's go to bonds, BND, the broad bond index. Basically flat on the day, just hanging out right at that 21, trying to determine where the short-term trend is going to go. Let's look at junk bonds. Not so good today. Did rally off their lows, did not undercut the lows from Tuesday. How about interest rates? The 30-year, kind of a tight range today across the board for bonds. You can see 3 tight closes on the 10-year right above the 21. Again, that's a change in the short-term interest rate trend. Let's see if it sticks. 0TYX, the 30-year, 3 tight closes there also above the 21, the green line there, 3 closes above it, and it's trying to hook back up. How about gold and silver? Well, the dollar was up today, as we showed. So what would you expect from gold and silver? Here's GLD. Uh, Bounced off the 21-day moving average, closed right on the 200-day moving average, down 1.2%. Was down much worse during the day. SLV closed down 1.72% right on the ADMA. This is the stronger of the two. And GDX, we own NUGT. Uh, undercut and reclaim the 21. When it undercut and stayed under for a while, we took half off. It rallied back above it into the close. So stop out with a small loss on half of our NUGT position. So those are the main index charts that we want to take a look at. Let's flip to the tail of the tape. Put call elevated again. We had that big spike again between 12:30 and 1 o'clock Central Time. Bunch of puts sold. It spiked it from like 0.9 up to 0.12, and that's where it hung the rest of the day. VIX up 9.5%, but still only at 22. Was up quite a bit higher. High of the day 24.30. Very up double digits at one point, and that did close below the 21. Fear and greed down to a 35. That's in the fear range. Excuse me, the fear range. We're operating under the bear case with the rally failure in the break of the 21. Some news today, news before the open. Final GDP revised up 3.2% versus 2.9 expected. That represents a strong economy. In Q3, do you think the Fed's going to cut or stop raising interest rates with the strong economy? No. That escalated the move to the downside pre-market. We were just about flat, maybe down 0.2%. And we ended up opening up down 8%. Jobless claims also slightly below expectations. That didn't help. And then at 10 o'clock, leading economic indicators came on, and they were down 1% versus 0.5% expected. That signals recession loud and clear. And the market accelerated to the downside after that before it bottomed at 130. Tomorrow morning, for the open, we've got PCE inflation data, so we'll be curious to look at that. Notes, one day up, now one day down in our day count. Expectations coming in negative because below all the moving averages. But wondering about the Santa rally. We got a little bit of each today, the heavy selling and then cut in half by the rally at the end of the day. Again, this 3,800 area, really it's a range, but undercut and reverse. I've got that in neutral, but really that's bullish that has held 3 times now. On the other hand, the Nasdaq 100 broken close below its 270 level. Two big trends, down 2.9% at the low at 37.64, and then a positive reversal at 130 took us up to 38.21. Here are the various ranges on the day and where we closed. The only notable up on the day was the dollar. Until late in the day, biotechs were weak early, but both IBB and XBI ended up closing positive. So from red to green, that's you always want to pay attention to that. It happened with solars yesterday, although we were weak today. It happened with biotech today, and those are two sectors that have been hanging near the top of the relative strength list. Down week, 11 out of 11 sectors down across the board with the spider sectors, but XLP and XLV, that's staples and healthcare, only down 0.23 and 0.14 respectively. So big outperformance there. And we've been mentioning how healthcare very frequently leads. And part of that is biotech because healthcare seems to be somewhat recession proof. On the downside, as I said, 11.11 stocks really hit. Gold, silver, and gold and silver stocks hit, although they recovered some toward late in the day. Oils were not that weak early, weakened all throughout the day and really didn't bounce. XLK and XLY, two of the tech sectors, weak, and solar's weak today. Here's our focus list. We'll go through that in a minute. In-house, we trimmed 2/3 of SDS when it was extended to the downside, and we trimmed half of our NUGT. That raised our volatility adjusted beta up from 0.06 to 0.09. So if the S&P is a beta of 1, we are have 91% less risk going into tomorrow. Bottom line, heavy early selling, 3,800 UNR cut losses in half on the S&P, and I'd say keeps the hopes for a Santa rally alive next week. So there are, let me scroll up a little bit. You can see the support and resistance levels, 3 undercut and rallies over the last 4 days around this 3,800 round number, 38.13 and 38.15. That's the minus 20% and the minus 38.2 fib retracement of the whole COVID rally. This has been a massive area all throughout the year, and very certainly a big area this week. So let's get to the focus list now, and we'll start off with what we own. Boeing took half of this off yesterday. This is basically a failed breakout. Uh, Closed back in, don't want to really call it a base, but in this consolidation that led to the breakout yesterday. Did hold the ADMA, still have up 1.5% on that. Mobileye, MBLY, 1% position in this. Again, we understand with the market, it's no sense having big positions. Still holding the 21, undercut, but closed basically just below the ADMA. Still holding on to a profit in that after doing some offensive selling on that last week. TMDX, noticed how it bounced off the 50 3 days ago, yesterday, or 2 days ago, yesterday back above the 21. And this is how you isolate leadership in a market like this. Anything that's above yesterday, so yesterday, big rally. Today, big move down, but a recovery. Anything that really didn't break below the range of yesterday and closed above it is absolutely acting outstanding in this market. And those are the ones that you have to pay attention to because, as I said, the strength is revealed in the pullback, and TMDX absolutely standing out over the last 3 days after this, now looks like a shakeout on Monday. So TMDX still have 1% position in that. I showed GDX. We cut half our Nugget position. Nugget is just 2 times GDX. Now let's talk about some ugly for today. KMX. This is retail, wholesale, automobiles. They were down much more, ended up down 3.7%. They were down 10% at one point. They are doing massive cost cutting, laying off of employees, really concerned about weakness in the business and going into next year. So if you're looking for signals of a recession, CarMax certainly jumped up today and said, yeah, we agree with that assessment. Micron, I mentioned yesterday about how they're cutting spending. Big gap down again, rallied a little bit, was down 10% at one point, finished up down 3.4%. New recent lows, not 52-week lows, but again, emphasizing weakness and cost cutting. And because of their cost cutting, that impacted stocks like KLAC, which was in the 21 over 21. Any semiconductor equipment company, when you hear that you're cutting capex spending, that's going to hit them. That broke the 21 today. Uh, LSCC, I believe, also got hit hard, also down 4%. But ASML is another one, down 4%. So semiconductor equipment as well as semiconductor stocks getting hit today. Another stock that broke out yesterday, along with Boeing, Caterpillar, gave up the breakout, undercut, but bounced at the 21, closed at the top of its range. But this is what happens buying breakouts in a bear market. Very typical reaction. It's the exception, not the norm, when something is breaking out and doesn't fail when you're in a bear market. Elf, another one. We're going to talk about ones that showed up on this 15-minute chart that I was talking about today. Undercut yesterday's lows, closed back above yesterday's highs. Again, absolutely one of the strongest stocks in the market. If you can find anything that got above yesterday's highs when you had a slingshot down and then higher like you did today, and even with the market closing with 1% plus losses across the board, anything that's holding up well and closed back above yesterday's highs definitely goes on the leaders list. Here's another one, Crocs. Didn't undercut yesterday's lows, closed right near yesterday's highs. Let's go to a daily chart on this. Undercut, reclaimed the 100 area. This is kind of on the strength of what Nike did yesterday with the big gap up. Nike undercut its low of yesterday, its gap low. Not surprising with the early weakness today, but ended up finishing positive, up 0.8%. So hanging tough inside the range of the gap up day. Another one acting extremely strong, NVO, above yesterday's highs. We missed this one. This is very tip. This is the, like picture perfect of this one pullback day to the 21 after the earnings gap up, and then just riding the ADMA higher. One close below the 8 there, regained it. Extreme strength on NVO. BNTX, another medical, in this case biotech stock, closed above yesterday's highs. Again, isolating strength. NBIX, another one above yesterday's highs, and didn't even act like we were pulling back yesterday. Here's yesterday's action, inside day, all day while the market's pulling back, and then very obvious buying into the close. These are the type of stocks that end up at the top of our list. BTU, for when the market rights itself, above yesterday's highs, holding the 50-day on any pullback. Nice 2-week tight action right now. Stochastic turning up. AbbVie, two big big medical stocks here above yesterday's high. AbbVie bouncing off the 21-day moving average, relative strength at a new high. Add Merck onto that, MRK. Bounced at the 21, riding the 8 higher. SRPT, another biotech stock. Uh, Breakout that's holding, so pay attention to that. I said it's the exception, but biotech, a very strong sector. Look at the relative strength on this stock. Broke out yesterday above. Now, really, technically, it broke out back here, then pulled back into the base, this flat base, and then rebroke out above the pivot plus 5% area and held that today. So some big strength there. And one we haven't discussed, but Ted brought to our attention this morning, RXDX, big gap up on earnings, 1,186%, 165% gain back on 12/7. Following the gap up script perfectly, has not pulled back and even touched the ADMA all these last 2 weeks inside the gap up day, despite the market selling off over the last week to 7, 8 days. So that's our focus list, and that's going to wrap it. As always, love to hear from you. Don at revereasset.com. Remember, it's not how much you make in the market, it's how much you can keep. I thought the chances for a Santa rally were extinguished today, but the late day undercut and recover of that key 3,800 level, really 37.95 to 38.20, it's a range, did show some underlying strength, keeping the hope for that alive. And we'll see how it plays out tomorrow and into next week. So wrapping up Thursday, 12/22. This is Don Vandenbord. Just the facts here at Revere. No opinions. Market doesn't care about anybody's opinions. Price and volume is all that matters. And that'll do it. Thanks for listening. Have a great day.